Welcome everyone to this week's community call. We hold these community calls every other Tuesday at 9 a.m. Eastern, 1 p.m. UTC. Today, I'll be going over a few things. One, very quickly, at the start of the call, I'll go over kind of some of the questions I've had on capacity and how capacity and cover works in V2. I'll highlight the two Dune dashboards that have been launched here in the last few weeks. And then I will give an update on the tokenomics roadmap. I'll provide an overview and then share some resources where you can keep track of the progress that's being made. I'll be collecting it all in one area for everybody. I'll go through our standard updates. I'll provide Hugh's weekly update from the foundation. We'll do a weekend review of cover sales, the top 5 or 6 cover products from April 2022 to 2023. I'll highlight some of the governance forum discussions, and then it'll be an open forum for discussion. So I will jump right into things and talk a little bit about capacity and cover in V2. I know I've had some questions recently on Discord and a few people sending me some messages asking about when covers roll off in V2 and when capacity opens back up. When you're buying cover in V2, you'll see different fields that'll populate on the quote page, the global capacity, so the total capacity available across all staking pools, the capacity for a specific staking pool, the ID for the staking pool that you're going to be sourcing your capacity from, what asset you're choosing to pay the cover fee in, the amount of slippage that you're willing to take when you're buying cover since pricing is on chain, and then the annualized cost of cover, which is specific for whatever pool you're buying from since the pool manager set the pricing. And capacity is specific to a product and then to a pool. So there's the total product capacity across all pools that can be sold. And that's made up of the reserved capacity, which is essentially the cover that's been sold and is reserved. And then there's the available product capacity, which is the amount that is available for people to buy. In the reserved product capacity, you have the active coverage, and then you have expired coverage, and that rolls off in these bucketed periods of 28 days. Even if something is expired, if we haven't come up to the 20th of the month, which is when covers become available again, if they've expired within that 28-day window, then capacity will be opened up again. Capacity can be increased if staking pool managers choose to allocate more NXM to stake against a particular risk. I think we saw that this week with someone signaling that they wanted to buy a large amount of GMX cover. Somebody must have seen that. They staked, opened up more capacity, and that person, I let them know, and they said that they were going to kind of wait and see if the pricing came down on that. But generally, if there is no capacity for something and you're waiting for it, the 28th of every month is when the expired covers are going to roll off and more capacity will be open again. I know the engineering team is talking about making improvements so that people could either expire covers or that bucketed period would happen maybe on a more frequent basis. But as of right now, it's every 28 days, expired covers will be opened up and become available again if you're looking to buy cover. So just wanted to quickly go over that. I know we've had some questions. If anybody is wondering, that's how it works. I will get more details from the engineers, and I'll have that updated in the documentation as well, so that we can use that for future reference for any questions or if you're looking for clarity on when capacity opens back up. I wanted to talk about some of the Dune dashboards that have launched here in the last couple of weeks. Since we've had our last call, the claims dashboard has launched. And this is a really nice breakdown of claims in V2 and V1. There is a breakdown of total claims paid in ETH and DAI. You can look and see what the breakdown is across ETH and DAI, with it looks like about 2/3 of claims being paid out in DAI and 1/3 being paid out in ETH. And you can go on the actual dashboard and you can toggle between ETH and USD values for the total claims paid. And for most of the fields, you can toggle between ETH and USD for values, and you can just apply that param across the entire dashboard. If there are open claims, you'll be able to see them here. For closed claims, you can see that for V1 and V2. There's some different categories there, but a lot more comprehensive data on claims that have been assessed, how many people have voted, what the rewards have been like. There's a breakdown of claims assessment awards across V2 and V1. And one of the notable things is it talks about the average gas cost for participating as a claims assessor and voting in V1 and V2. And you'll see that the average gas cost for claims assessment in V2 is 90% more efficient than it was in V1. So that's definitely been a big benefit as more people have gotten involved in voting in V2. So you can look at this. I have a link in the thread for today's call that goes to the Nexus Mutual page on Dune. you can find the claims dashboard as well as the capital pool and ownership dashboard. This one's really great. This breaks things down by the assets we have in the capital pool. It gives you a breakdown of the MCR value in ETH or USD. Same with capital pool holdings on an aggregate level. You'll see the split across assets as well. You can track the MCR ratio in this dashboard. We've also got the numbers on membership and growth over time. You can look at the NXM supply, NXM holders, the distribution across all of the holders, and then you can find the book value per NXM in either ETH or USD values there as well. So both of these dashboards provide a lot more granular detail than was available before. And then there's two more dashboards that'll be coming. The cover dashboard, which I think is relatively close. So that'll be launching here in the next week or so. And then the staking pool dashboard, which will be launching in the next few weeks as well. So I think there's still a little bit more work to do on that. But once those are all live, you'll be able to find those on the Nexus Mutual page. So we'll have those incorporated in the docs. And once I verify the information, I'll get the claim amounts and everything that are on these dashboards updated in the docs as well. And then the tokenomics roadmap. I know that there's been a lot of questions on Discord, and there's a lot of discussions that have happened about tokenomics across the forum, on Discord, in various places. So I kind of just wanted to put everything together and give people a highline view of the direction that the R&D team and the engineers and some of the other teams that are supporting this initiative, the progress that's been made, a little bit of the background, and then the remaining phases to go. So looking at the roadmap, you can find a detailed breakdown in the docs as well, but a high-level review of progress. For those of you who aren't aware, the background is that the bonding curve is what allowed the mutual to bootstrap capital and to allow people to contribute capital to the mutual in exchange for NXM tokens. This worked relatively well for a fair period of time after the protocol launched, but then in about December of 2020, January of 2021, we saw the MCR value dip down to about 100% and kind of hover between there and just under 100%, which means that people couldn't redeem NXM for ETH. That held in place, and then eventually in August of 2021, you saw the book value, the value of WNXM and book value kind of diverge. So WNXM went under book value. There was a buyback that was done after a governor's proposal approved that in November of 2021. This buyback took place over about a 3-month period. And after the buyback, members had voiced disappointment that, and a little bit of frustration that the book value, the gap between the WNXM price and book value wasn't closed. And from a lot of those discussions, the tokenomics working group was created in Q1 2022. Dopey originally was leading the tokenomics working group. There was initial feedback on some preliminary designs from people who were both critical of the mutual and then longtime supporters to figure out how we can kind of overcome this blocker with the bonding curve to allow people both to exit the mutual if they wish to and to allow capital to flow in and out of the mutual freely. So in the investment team's funding request for Q3, Q4 2022, Ray was the one that ended up taking ownership of the tokenomics project, being the lead, working out the modeling, working through some of the preliminary design work, and modeling out things in extreme scenarios. In August of 2022, Ray started up the tokenomics revamp channel on Discord and started providing regular updates. In January, he put that first proposal on the forum, the tokenomics proposal to replace the bonding curve. And then there were basically two discussions happening. One is just augment the existing bonding curve and then raise design of the ratcheting AMM design. There was a signaling vote that showed support for the ratcheting AMM design. And from there, we've moved on to the RFC for the tokenomics design detail post that's on the forum. With that, Ray is essentially asking for feedback on the mechanisms within the ratcheting AMM system. And that's essentially where we're at now. That's the current phase, is finalizing the mechanics and the ratcheting AMM system. From there, it's going to be developing the system, which is what the engineers are going to be focused on. Right now, both the Foundation and DAO teams are at an offsite. They're, coordinating on goals post V2, how we achieve growth. And one of the things they're going to be talking about is what the work looks like for developing the system, if there's anything mechanics-wise where there's a gap that needs to be addressed, and making sure all the teams that are involved in this project have a solid handle of what everybody needs to do to put in, and then scoping out the engineering resources required for this project so that the engineering team can get a handle and then get a project plan in place and work on development once those mechanics are finalized. From there, it's going to be setting the system parameters once development starts, which can be done in tandem, essentially, with developing the system. That's where member feedback is going to be really important. This is where people can discuss how much liquidity should be in the ratcheting AMM, what the ratcheting mechanism is going to look like, how long we want ratcheting to take place to move up to book value. So the speed of the ratchet, some of those things like Ray talked about before, and the mechanics. How does the TWAP mechanism work? How do we avoid supply shocks or things with capacity, since the NXM price also determines the capacity, how much cover we can sell, how cover is priced, all of these things, making sure that that is secure. So the system parameters will be an important discussion for members to provide input to discuss while the system is being developed. And then in the development process, those parameters can essentially be set after things are finalized and audited. Once all of that's ready, it'll go to an on-chain governance vote. And if approved, that's going to move on to the next phase, which would be implementation. There is a lot of discussion. I mean, if you go back and look in the Tokenomics Revamp channel, there's been a lot of discussion that's happened there. There's also been a lot of discussion on the forum. So it is hard to track all of these things. You'll find in the docs in the token model section, which I have linked in the thread for today's call as well in the community calls text channel, that I've kind of put some of this information, the background, the current work to date, and then the remaining phases in there. I'll keep that up to date. I'll try and get status reports from the team, basically on their progress, if there are blockers, and I'll include those in there as well over time, so that members can always look in the docs. If there are questions, can discuss it on Discord and on the forum, but just kind of collecting all that information in one spot, because I know that that's something that members are very interested in. It's a very important project for the mutual to be able to have capital flow in and out to allow people to leave if they would like to, but essentially create a way for us to onboard more capital over time and allow people to move in and out of the capital pool. So that's just a high level of the roadmap for the new tokenomics project. I'm happy to take any questions before I move on to the foundation update, if anybody has any.
Yeah, I guess I've got a quick question. I think it's a similar question to the one I asked last call. So I guess there's no real guidance on when this might be rolled out. I mean, I think Ray's initial post in the forum was that he guided to Q3, Q4. Is that kind of still the case?
I mean, I can't really speak to timing. I think it's going to depend how long the development process takes from the engineering side. Of course, there's always things that come up, and then it needs to be audited, and auditing is kind of an external thing that I don't believe the team has control over. They can reserve an audit slot, but so I think there's some external factors that really can't be controlled, and it's definitely something that we want to make sure is secure, since that's all of the capital for the mutual. But
one question I had was the development. I appreciate all the communication. The development does seem a bit under wrap. So I don't feel like community members have a sense of how hard it is to develop the system. That second phase right there. Have you heard of? I don't know if that's something but are people saying that it's it's a big technological challenge, or are they saying that it's actually quite simple, but it's just a case of making sure all the contracts are fine and exploit proof?
From my understanding, it's twofold. One, there's designing the ratcheting AMM system, setting the parameters and everything. That's something that can be done. But the important thing is that how we determine the price of NXM also impacts everything else within the system, since NXM is integral to determining the cost of cover, opening up supply. So once it's developed, they also have to make sure that it doesn't break anything else in the system.
Gotcha.
So there's a lot of things that the bonding curve mechanism currently impacts, and then this new ratcheting AMM will impact as well. So I think it's about checking for those things, making sure it's secure and that it
Yeah.
can't be exploited or gamed in any way, and then making sure some of those mechanics like we've talked about, which I know is something they're talking about as
Yeah.
well. Um, all of
Uh,
those are secured in place. So I don't, yeah, I hopefully that provides some context, but
Yeah.
feel free to ask any follow-ups.
Yeah. Sure. Just one last question, I guess, just from my own curiosity. The NXM, the system price, that's the book value price at which we will eventually ratchet up to. Is that what you're referring to?
So
Is that what the system price is?
right now the price that's used in the system is the bonding curve price of
Yes.
NXM. When the ratcheting NXM takes or when the ratcheting AMM takes effect, the price of NXM is going to essentially be the book value of NXM. But then it's determining what is that price? Is it just the book value, or is it the plot price of the ratchet up to book value, or what exactly is that? I don't think there's been
Okay.
a solid discussion of how we bridge that gap as far as the oracle when the initial ratchet takes effect. But long term, it'll be the book value of NXM. Yes.
Okay. Cool. Perfect. Thank you.
Yeah, no problem. On the foundation side of things, large portion of the foundation and the DAO teams are working together at an offsite. A lot of what they're talking about is the strategic direction that we'll be taking post V2, and then plans for growth strategies related to cover sales and then expanding distribution now that V2 is live. I know the team is going to be doing um, a deep dive on tokenomics, like I talked about. Deep dive on tokenomics, just to make sure that all of the teams that are working on this understand the scope, the mechanics. They're going to be talking about identifying any potential gaps that might be there that need to be addressed, scoping out the development plan for this, and getting a project plan in place. And from there, hopefully coming together and getting things on track to start the engineering work on the new tokenomics. Um, there's a lot of different things that the foundation and DAO teams are looking at too. I know one of the things from the community side is looking at processes that we can further decentralize over time. The Dune dashboards are primarily to improve transparency across the mutual to give people an easy way to access some of these key metrics and analytics. I know on the operations side, Kaylee is working on some resources for the community just to have a highline view of how spending works at the DAO, from the DAO treasury to the DAO team's multi-sig, and providing more resources for people to get involved and really have a handle on what's happening within the mutual, what teams are working on, what progress they're making, how treasury funds are being allocated and spent, and just giving members more insight into operations, what's happening, and how they can get involved. Um, I know that Unity Cover, which is the staking pool that's built on top of the protocol at the moment, Unity Cover is the one that is managing ETH staking cover. So they've got that initial partnership with Liquid Collective, and as they scale up over time, they'll be buying more cover from Unity Cover. And they're also working on the directors and officers D&O coverage for Web3 companies. So right now they're building out their distribution channel, and they're receiving a lot of inbound on D&O and inbound on ETH staking. And they're working on, getting these products to market. ETH staking has been around for roughly a year now. So it's about closing some of those deals and following up with different people and, looking at different markets that can be tapped into. And D&O is not live yet, but I think is close to being launched, if I remember correctly from Hugh's past comments. And so they're putting a lot of work in to close some of these deals, get things off the ground, and go through some of the inbound they're receiving on D&O and ETH staking cover. So those are the updates from the foundation. Let me know if anybody has any questions on that before I hand things over to Sam and move on to the last week in review of cover sales. I will hand things over to Sem. Sem puts together the data for the last week in cover sales and some other analytics. So, Sem, I will let you take over and provide a review.
Thanks, Brave. Hi, everybody. This week, we have sold about $7.9 million in cover and earned about $12.7 thousand in fees. We are continuing to see growth in our numbers post V2, and we're expecting these numbers to go up as we move through this quarter. Things to note here in this page is Sherlock is we have sold a renewed cover with Sherlock this week, and it tops our list in fees earned and cover sold. We have been seeing like the past week, big cover purchase for GMX, and we're expecting this trend to continue. Here we can see the top 6 cover products from April 2020 to April 23. And we have listed them according to the total cover fees. So we earned the most cover fees from Convex Finance V1. We have also earned a lot from Curve Pools, Enzyme V4, Aave, GMX, and Yeti. We are continuing to see interest in these products, with the exception of Enzyme V4. We have earned about $1.9 million in total cover fees from this top 6, and this accounts for 48% of the total annual fees paid last year, which is $3.9 million. And now, looking at the future, we have improved pricing mechanics in V2, and we have already started to see some growth in cover fees earned because pool managers can now set their minimum price for cover, and dynamic pricing can take effect if risk is mispriced. These are my notes. Ray, would you like to add anything?
Yeah, I think noting the large cover buys we've seen in the last year, we see a lot of demand for these existing products: Convex, Curve, Aave V2, GMX, Yeti, and we've seen that carry over since V2's launched, like Sem had highlighted. Just to give you an idea, in the last year, from April to April 2022 to 2023, we've sold a little over $920.5 million in cover. Of course, that's the aggregate. There's varying cover lengths, and we've seen an aggregate total, like Sem had said, about $3.9 million in fees earned. In V2, we've seen that cover's been priced higher to reflect accurately the amount of risk. And as more staking pool managers get involved, we'll see higher pricing, but we've even seen with GMX that even though the pricing is higher, that there's still consistent demand for people to buy cover over time. So we've seen some larger cover buys come in, and as larger cover buys come in and the pricing is higher, we are offsetting some of our risk with a higher amount of revenue coming into the capital pool. So since we've launched in 2019, we've sold over $5 billion in cover, and I think we'll see that continue to grow over time. But the big thing that I know the Foundation and DAO teams are focused on is a plan to increase the cover fees that accumulate to the capital pool and are distributed across staking pool managers and the people that choose to stake and delegate their NXM. And then looking at different options to increase value in the capital pool as well, such as investment allocations over time. I can talk a little bit more to that on the slide about governance, but thanks, Sam, for going over that. I look forward to hearing about your analysis in the next community call a couple of weeks from now. So highlighting some of the discussions on the forum, the ones I posted here before from various members of the investment team, those are still active on the forum if you'd like to check those out. I think the two high level on investment that have been posted here in the last several weeks, one of them is the request for comment from the Avant-Garde Treasury team. They've got an RFC where they're asking if members would like to use the capital that's currently in the enzyme vault, which is a little over 13,200 WETH. Use that in the enzyme vault to further diversify across ETH staking solutions, which would be managed by Avant-Garde Treasury. In their proposal, they're talking about ramping up AUM over time to 20% of the capital pool, or 28,800 ETH. So this has gone through discussion here for the last couple of weeks. There's been some back and forth. I've asked some questions from the Avant-Garde team. It sounds like they're kind of going to go back and focus on just the initial proposal, because they had some other things they had brought up, like analyzing risk for the mutual. I think the feedback that was given by some other members is just to focus on the initial investment proposal, and then if they would like to move that to a formal protocol improvement proposal, they can at this point. But if you have any comments or want to review that thread and provide any feedback to the Enzyme the Avant-Garde Treasury team, I highly recommend you do so. We also have another RFC that was just posted late last night from uisce.eth. So the RFC is to stake some of the ETH in the capital pool and allocate that with Rocket Pool. So this RFC is proposing to stake 14,400 ETH, or 10% of the capital pool, in Rocket Pool. They outline a way that the mutual can do that just by swapping ETH through CowSwap to our ETH. There's an integration that's coming with 1inch that'll allow us to swap into our ETH with minimal slippage. So I haven't gone through that proposal in its entirety yet, but there's a great breakdown of the risks, of the opportunity, of the exposure that Rocket Pool has, maybe not exposure, but the underlying clients that they use to further client diversity across staking products. So we currently have about 22% of the capital pool that's allocated to ST-ETH. That's grown over time. If we add to Rocket Pool, if you look on rated.network, you can see the split across different execution clients and consensus clients. And so further diversification across those spreads the exposure to risk if there's a bug in any of the consensus clients, but also promotes healthy client diversity across the network, which is also very important. So I highly recommend people review both of those RFCs. They're both very important. I think the engineering team can probably provide some feedback on either of those, on what the technical lift is from their point of view, if there's any resources necessary from the engineering side, if that poses any blockers in the priority list. And then, of course, there is the proposal that Ray had posted, request for comment as well, on the tokenomics design detail, which is kind of what I covered for the current phase of the tokenomics project. But you can find that there too. If you haven't reviewed that yet, highly recommend you review that and provide any comments on those different mechanical designs for the ratcheting AMM. So there's a lot going on in the forum. I recommend everybody check out all the posts that are in the highlights, and if you'd like to participate in the discussions that different members of the investment team have put up on the forum as well, you can do that as well. All of those threads, all of those forum posts are in the thread for today's call in the community text channel as well. And then now is the time for the open forum. So I know I've covered quite a bit, but if there's anything I haven't covered, or if you have any questions, feel free to jump in now, and the stage is yours. So you can talk in voice, or you can send a message in the community calls text channel if you'd like. Thanks everybody for joining us. We host these every other Tuesday, so we'll have the next one in 2 weeks. Look for updates in the weekly newsletter. We'll have more information there. We'll have details on when the next call is. I will edit this recording and have this up here the next day or so. Bear with me as I work through some other priorities, but we'll get this up and we'll post this in the community calls text channel as well. If you have any other questions, feel free to leave those in general or ask me anything. I hope you all have a great rest of your day and a wonderful rest of your week, and we will see you on the next call.